What's up, guys? What's up? What's up? What's up? How we doing? What's good in the hood? We good? Here we go, baby. ADP. So stacked for news today. ADP, UC, and PMI at 10 o'clock to wrap it all up. So expecting and anticipating some volatility. YouTube today, yes sir, Franny. We are here, sir. So for those inside Red Pill, we've been bagging this morning. So currently just sat flat at the moment. So I'll just briefly talk through this whilst we wait for ADP. So this entry here in at 30, scaling out to 63. Which is basically one of my, I'm not going to go into too much detail, but this SIBI below this pivot high, when you have these order blocks supporting, is my Exacorn, right? So it's one of my models. So you're looking for these propulsion blocks to support price as price moves up to your objective. And our objective was to come and take out this doji. And so red pillars will know why that is. So that has fulfilled our objectives. That was the most recent trade that we've taken. Before that, some red pillars have taken some awesome trades using my H1 to M5 model on the low. But less of that, more about what's going to happen today. So at the moment, what we have yesterday is accumulation inside fair value. So this is known as a point of origin. Okay, what we have right here, this accumulation inside of a discount, of a higher time frame discount, which was a 15-minute. So this accumulation here is a point of origin. So what you're always looking for is for price to come back to mean threshold of that accumulation for continuation, which is what we got right here. So at the moment, I don't want to see this low go. And so for the aggressive traders this morning, red pillars were framing their entries based off this low, anticipating price to move higher. Okay, so the same principle is true for me going into ADP. I do not want to see this low go. If this low goes, I'm just going to move to the sideline and wait for price to set up closer to the open. All right, because price should not go through this accumulation inside fair value if price is going to distribute higher, because essentially what you have here is an accumulation of long positions. Okay, so if we dial in on what we actually have here, up on this high, this is my current draw on liquidity to come and take out 19,005, and I don't want to see price through this low. However, I'm just going to sit patient and wait for ADP. I'm not a gambler, so I'm just going to wait. But this accumulation inside fair value took place at fair value on the daily in terms of X levels, right? So if you guys don't know what X levels are, they are my dealing ranges, which enable you to dial in your PD arrays. Okay, so it's in depth, but as an overview, that's what you see on my chart. These are my X levels. So this is fair value on the daily, and you can see that this accumulation took place at fair value on the daily, which is providing the opportunity for market makers to accumulate positions. All right, either net long or accumulation for continuation short. But if you're looking for price to move higher, this is an opportunity for the institutions to start accumulating long positions, which is what I am foreseeing on this current low. So at the moment, we obviously traded up to our high, just sat neutral now, terminated the trade, just now waiting for ADP to determine what I do next. All right, but at the moment I'm not wanting to see this low go, and I'm looking for price to drive up towards this high. Let's have a quick look at the gap. Where did we close out yesterday? That's where we closed out. Why do I have this gap? Is this gap old? Yes sir, that's an old gap. See ya. So we just have a this gap down on the low still. Let's just clear up this mess. Let's have a quick look at ES's gap. So this is Thursday the 15th of August. Thursday the 15th of August, which is this gap in here. So the only negative I have for bullish price today is the fact that NQ has carved through this gap and ES is still yet to go and fill its gap. So that's the only thing I'm mindful of. And given that it's ADP, we could easily just clear down to go and fill out this gap. Okay, which would take us all the way back down to X levels 62 on the Prem. Right, which would essentially be back into this daily volume imbalance. So at the moment, I'm just sat neutral, waiting for ADP so the market can tip its hand. But if we do go on a little carve, if we take out that low, the accumulation inside fair value on NQ, I'll move to the sidelines and just wait for either a London close reversal or a trade going into the open. But absolutely not going to gamble in here. Hell no. So what we have here, so this range on the low is currently unmitigated, right? So this break of structure, so this high, this low, it left a break of structure. So there's every chance price respects where we are right now, right? So it mitigates this range and continues higher. For me, we're just too close to ADP for me to trade that. I've already traded this long, and I don't particularly want to trade this. However, if you were open to risk and you haven't taken a trade yet, this unmitigated range underneath this engineered liquidity is an opportunity for price to go and continue higher, right? So it's coming down, mitigating this range underneath engineered liquidity for price now go and drive and continue higher. And this is all framed off the basis of this low, not wanting this low to go, because of what I've mentioned previously. Nice little reaction off mitigation there. Anyone inside Red Pill take that mitigation, by the way? I was just busy chatting away. Fair play if you did. Fair play if you did. Guilty as charged. So, unless price is super bearish, these highs, when you ever see a candle like that, which is just distributed straight down, they often get revisited. Right, so this high up here is sus for me. Not only that, we have this divergence up on these highs and these relatively equal highs up here. So ultimately, that's my draw for today. But don't particularly want to trade this close to ADP anymore. So my trades today. This is an M5 continuation model inside of here. It's one of my market maker buy models, entry models. So entered back in here, took a little scalp back up into a premium. No, not here. Here, back into a premium. Initially wanted this to hold, then we dumped because we didn't have volatility. Came all the way back down to my H1 to M5 model on the low, back down at 79x levels on the H1. And that's what this is. So this is an H1 to M5 fill. So it's a little 5-minute BISI fill on the low, right in here. All right, H1 to M5 model. So at the moment, just sat patient, waiting for the old ADP. It's just so close to ADP. Like if we weren't in the realms of ADP, I'd be more inclined to take this, but this wee chestnut can do anything. Terry in the office can press buttons, you know. Moves away from being algorithmic delivery. OCD flaring. But how did you guys get on yesterday? Did you get on alright? Anyone have a good day yesterday? Sheesh! It was hellfire for us. Well, certainly for me anyway. Monster day, one of my biggest days in the last few months. Incredible day yesterday. So clean. Yesterday was good, Franny. Really can't sort out my eye. So the inclination for many traders would be to enter in here, right? If they're using this principle of mitigation, just put their stop below that low. It's just not how I trade. Like having a stop that wide is just not how I trade, right? You know, given that we've got ADP coming into the market, it just doesn't interest me, right? I like precision, absolute precision. And although this is where I'd want to be if it wasn't ADP, because of ADP it's keeping me out. So again, context before time, context before price. By the way, for anyone who was on RP doing the my opening range breakout yesterday, sheesh. Thank you very much. Yes, sir. So red pillars, make sure you go and study the OBR. Yesterday it was an OBR. So this is one of these where, you know, I can anticipate where price is more likely to go, but I don't necessarily have to trade it, right? And this is what's so important for building this. All right, discipline. Just because you see an opportunity doesn't mean you have to take it. I might get the gardener kicking off in a minute. If you hear that, apologies. I haven't quite killed Frank yet. Poor old Frankie. So again, if you oh no, tell me about it. If you longs this, you want to make sure that you're paying yourself inside of X levels, right? So you'd want to pay yourself if you're moving higher. For me, it's super high risk if you're trading in here at the moment, this close to ADP. Bum, 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 bum. Candlesticks are moving. Get out of here, boy. He'll probably just dump all the grass cuttings on my doorstep and go F you. You don't want to mess with him. Alright, let's have a quick look at Dixie. So my two points of interest on Dixie are this high and this low. So this is where I'm looking for Dixie. So where we are, like if price moves up, and then I'd anticipate it to move down. However, if we continue down, I'm going to anticipate it to move up towards this high. Right. So where we are at the moment is a bit of no man's land on Dixie. Typical going into ADP. But what it's left is an inefficiently delivered range on the 1 minute. So I'm now we're down here, I'm half anticipating this to move down to then move up towards this high. However, if we respect this inverted fair value gap, I anticipate it's come up to here to then work down towards here. So we still got the SMT tag on the Nasdaq. Divergences both sides of the market. Bom, bom, bom. Just have a look here. So if it wants to wick into, I'll be mindful if it wants to wick into, like wicks to the damaged body tells the story. So if it wants to wick into mean threshold of this MWOG, that is pretty much where my buck stop is. So this is what you got to anticipate with ADP, that you're going to get a wicky price action. Doesn't necessarily mean your trade idea is invalid. It's just sweeping. It's just sweeping out stops, taking it, especially if the price is going to be hyper volatile. It's just going to sweep out stops. Which takes us back into straight back into that pull on the 5. Volume balance on the hourly. Remember what we say about volume balances at swing highs, swing lows. This is where you want a little bit of patience. What time is it now? So it's 8:08. Got ADP in 7 minutes. So current POI for me would be 73, which would be the weekly volume balance. Weekly volume balance of the MWOG, 50%. That's pretty much where my buck stop is for higher prices. Uh, 2 seconds. Good morning, Debster. Good morning, good morning, good morning. What's the cooking? What's cooking in SoFlo? Probably beautiful weather as always. Shark soup. So just waiting for ADP to tip its hand. Buck stop for longs at the, for me at the moment is down at mean threshold of this MWOG. But I'm conscious that ES has still got a gap to go and fill, which will take you all the way back down here. Alright, 1 minute. So you guys know what I'm looking for. Don't feel like you have to jump in straight away on ADP. Like if there's no entry, there's no entry. It's as simple as that. If you took the entry, make sure you pay yourself. So you should have already paid yourself taking your 10. Don't like how it's holding here. You want a better reaction off that low. I took my runner there. So I'm just gonna sit super patient now. So you just got to be mindful now that ES has got that gap fill. So for me, it's more likely going to go wrong for this gap fill. Now that we've broken through that accumulation. I'll take us down to... Yeah, tiny little stop. Like 2 points or something, who cares? Paid myself anyway, so. You want to be super careful here. Don't try and bounce this. Which is where if you're not in a short, you just gotta literally just suck it up and be like, you know, okay, well, I'm not in it. Okay, so what? But don't chase it. As soon as you start chasing, that's when you start to unravel as a trader. Right? I wanted this low to hold for ADP to go and drive out the highs. I don't need to start flipping and start chasing it here, right? I'm not in the short. So traded longs, bounce, run a stop, now just neutral. So it's this gap you've got to be mindful of, right? All the way down at 5484. So this is where I'd anticipate to drive price to drive down towards. Of August. Okay, now I mean, ES is 2 gaps off. I apologize. Like, this is NQ's already filled this. So yeah, be very, very careful trying to bounce until ES gap fills. So you got more news in 10 minutes. You've got unemployment claims coming out in 10. Patience. Any trying to jump in on this, you are chasing price. There's no if, buts, or maybes. You're chasing. You can know where it's going, but you can't jump in it. You just can't do that. Have your bias and trade along with it and get in sync with it. But if you miss it or you're offside, let it go. Patience. Patience. If you were bouncing, you'd just be bouncing anti-trend, which is not what you want to do. Five minutes unemployment claims. Just gonna wait for these. Just gonna wait for the news to get out of the way before I look to engage again. No entry for me on that low. For news, hell no. So just patience. Don't feel like you have to trade. You don't. Where we are, I'm completely neutral, so I didn't want to see a price go through accumulation inside fair value. It swept that, and then we've ripped on data. So we've dumped on ADP, ripped on UC. I've got context for both. I've got context for why ES would want to go down and fill this gap. I've also got reason for NQ to want to drive up and take this liquidity. So where we are right now, I'm completely neutral. There is no trade today at the moment. Is there anything anybody wants to go over? Because I'm not looking to trade this. Does anyone want to touch on a topic? Go over something. I'm not trading in here. Simple as that. I'm waiting for the open now. See where we are going into the open. There's nothing in here to trade. Nothing that's high probability anyway. Anyone want to go over something? Oh, yeah. Oh. I can go over it very briefly, Debbie. Go over it very briefly. I'm not going to go into details. I teach all that inside of Red Pill. But what you need to know is the fundamentals of how I do dealing ranges and how they differ from ICT. So ICT defines a dealing range when a former high is swept and when a former low is swept. That is what he would define as a dealing range if you had a low over here. Right, that would be a dealing range in ICT's terms. Right, so essentially he would class this high and this low as a dealing range. So the way I do it is very, very different. And the way that I do it is through protected highs and protected lows. And the way that they work is very, very clear and very, very simple. So you have a low when it closes above a former high, a swing low, that becomes your new dealing range. There's no above below bollocks, right? Because 9 times out of 10 it doesn't give you your answer. This gives you your answer every time. So the swing low, when it breaks out and takes out a former high, is your new DR. So if you put in a new high that closes above a former high and this is a swing low, this becomes your new DR on that time frame. Now there's so much context to this and how deep X levels go. Like I can't teach it all on YouTube. Like if you want that, there's a whole course inside Red Pill, but that's like the nutshell. So that would be, for example, a M1 chart. So inside of that, you're likely to have a wider swing, right? So this would be a higher time frame swing, and the same principle applies. You would have for example, a low which put in a new high below a former low would create a new 5-minute dealing range. So the next one, you got to know your time frames as well. I have specific time frames I use, but this would be your 5-minute dealing range, right? This high, swing high, which put in a new low which closed below the former low, is your new 5-minute DR. So what we're always trying to do with X levels is we're trying to go and find the highest time frame X level to frame our higher time frame PD rate off, and what I call that is a nucleus, right? So say for example this was fair value on the daily X levels. This would be your higher time frame point of interest. So the reason why I call it a nucleus is because that's where price and the institutions are stepping into the market, and then what price will do is it will then expand out through the dealing ranges, right? As price now expands, right? And it's going to take liquidity above those dealing ranges as you go, right? That is price expansion. So what we're always trying to do is almost reverse engineer a cake. All right. So you want to get to your higher time frame point of interest. Sorry, I just realized my camera's died.
Control everything from the biggest tasks to the finest details. Personal.
You want to get to your higher time frame point of interest, and then there's ways to frame your entry, and how that's what I teach inside of Red Pill Uni, is how to frame your entry to the tick. And then you're looking for price to then expand back out through the dealing ranges, going and taking the liquidity pools. So for example, if you were trading this and your higher time frame point of interest was this very low, this is a 15, it's actually a 1 minute. So this here is a 1 minute dealing range. This low, this high, which put in this low. So your first target would be to take out the 1 minute high, right? Below that, you'd look for a 15-second breaker structure, and it leads to a 1, so then a 5. So once you break your 1, your next is your 5 minute dealing range. Okay, so this would be your 5. This low, which put in this high. So the same principles, you're looking to pay yourself inside of a premium, hold runners to take out the 5 minute high, right? Because now you're going from high time frame point of interest, breaking back through the dealing ranges. There's your 1, there's your 5. Beyond the 5 would be your 15. This is your 15 minute dealing range. Okay, and the higher the time frame you get is where price is more likely to respect from an institutional point. So this is right up to 79% on the X levels dealing range, right? From a higher time frame point of interest, which was actually an old MWOG, right? And it's literally gone from breaker structure on the 15 to the 1 to the 5 to the 15 premium, and now you're working yourself back up into a higher time frame dealing range. So this is still the X levels on the hourly, right? And there's different X levels, there's different percentages. I'm not going to go into those on YouTube, but this is 62%. So again, higher time frame is your nucleus, where price is more likely to respect from an institutional point. This is where the institutions are stepping in at higher time frame X levels, right? And then when you get to your higher time frame point of interest, there's ways and things that you're looking for when you get there. But that in like the most basic way that I can explain it without going into too much detail is it. All right, so it's the principle and the understanding of how dealing ranges are drawn, and then how to find your PD arrays utilizing those X levels. And then there's a whole lot of source above that as well. So if you're in a trade and you want to learn how to scale out, right? You know, this is your nucleus. This was the old MWOG, right? If you had this as your point of interest, right? For a bounce on unemployment claims, hella risky. But if you did, there's your high time frame point of interest. Okay, so now this is how you scale. So what I always say, as turtle suit traders, which is how I trade, I'm trading the turtle suit. You always pay yourself inside of a premium of the 1 minute dealing range. And then you hold runners to take the high. And then you're going into your 5 minute. And then you'd be going into your 15 minute. If you can either terminate here, or you're going to drive out to take the 15 minute high if you wanted to do that. If you had the context for why price is likely to drive out this high. Otherwise you just terminate. You find your level to terminate, right? But there's loads of different. That is like the most basic thing. Like if you can just understand that and you start applying that, you'll go a long way. Okay, and obviously it gets far more in depth than that. But that's like the general gist. So if you have issues. If you have issues with scaling out, like you don't know how to scale out positions, like this is how you do it. right? You do it utilizing X levels. Okay, and it's there's different percentages you can utilize, but I'm not going to go into that right now. So that's you seeing ADP out the way. Get some. And until that rate, like, I'll just explain something. So my trade yesterday was in here. So I traded this long. I took it all the way up into this high. So that was my trade yesterday. Right. If you go on my Twitter, you'll see my trades from yesterday. So it was yeah, here, right, and then scaled out up to here. That was my trade yesterday. Right, so from this level up to here. So if we just look at this piece of price action in here, you might be thinking, well, how the fuck do I get in on that? Right? So one way of doing it, of course, is if you have a 1 minute, there's your 1 minute discount, which is where I parlayed in. But if we just have a quick look at the 5, so this is where you start getting stack confluences. Right, so this is essentially coming back down into a 5 minute discount. So essentially what you're going to look to do, and honestly this goes so in depth, like I can't do it all on YouTube. Like this is where you start hunting for your PD raise. You utilize X levels to find your PD raise, and there are other percentages as well. These are just basic. All right, but this is how you'd start dialing in. Okay, so yes, we have got this 1 minute, but this is still our 5 minute dealing range. Like that was wicked below, but it didn't close below on the 5. So that is not a break, right? It is not a break. It is a manipulative move. It hasn't broken that 5 minutes, it's just wicked below it. Okay, so this, essentially you have a 1 minute, break a structure, boom, comes back down into a 5 minute discount. It's in here you start finding your PD raise. All right, so if you do old, basic bog standard stuff, there's your fair value gap. If you want to do even more bog standard stuff, there's your inverted fair value gap. Right? But you're utilizing X levels to find those entries. So if you took, for example, that exactly the same principle, right? We've got this 5 minute dealing range. This is still our 5 minute dealing range. Okay? It hasn't broken. It's still the same 5 minute dealing range. So if you wanted to, frame along on that Bissy fill, right? Take out that 1 minute high, right? But knowing that this is still your 1 minute dealing range. This right here is still your 1 minute dealing range. Right, so you could have gone from a 5 minute discount, paid yourself above, this would be a 15-second break of structure. This is still your 1 minute DR, this low, which put in this high that closed above that high. Is your 1 minute DR. Right, so if you're framing your entries long, you'd be looking to get it back up into either fair value or a premium. But what you want to be mindful of is when using X levels, the higher the time frame, the more weight it holds. And our job is to get as close to the higher time frame point of interest as possible and frame our entries off that. So again, 5 minute holds more weight than a 1 minute. A 1 minute holds more weight than a 15 second. So if you find yourself chasing price on 1 minute dealing ranges, you've got to understand that a 5 minute dealing range holds more weight. So if price runs up into a premium, you can get offset accumulation back down into your discount on the 5 to then continue higher. And this is what screws over a lot of retail because they start chasing the wrong dealing range. All right. So this is why we always say if you're going to enter, you enter in on a pullback on a turtle suit. But yeah, if you want to get more detail on that, there is a video on YouTube on that, on X levels dealing ranges, like the entry stuff. Get off my chart! There she is. This is what I mean. Like if you were in here, this is where you'd want to pay yourself because now you're back inside of a 1 minute premium. And you've literally just taken price from a 5 minute discount back up into a 1 minute premium. But there's so many different ways you can look at this and go through it. But 2 seconds, guys. You're welcome, Debbie. I mean, that's as basic as you get, Franny. Like there's loads of different rules and stuff. Like for example, this is like a no trade zone, but I'm not going to go into that right now. So at the moment, I'm just neutral. Took my trades this morning during London. We bounced my Hexacorn, which is this Sibiat, this pivot high, supported by order blocks, propulsion blocks. Drove out this little 15 high. So just at neutral, I've got context at the moment for why price would want to run the lows on ES, and the reason being is that it's a gap fill which NQ has already filled, which is the 14th of August. So I'm mindful of that. But I'm also mindful that we have context for why NQ would want to come and drive out this higher. So right now I'm just waiting for the markets to tip its hand. Like in here, yes, there's scalping opportunities, but I don't need to scalp. In between 8:30 and the open. So quick, did Dixie move on that news? So quick, not really. So you come back to this little inverted fair value gap on Dixie on this low. So for me, this has to hold for price to go and work back up. If it starts working back up, you're then likely to get the indexes moving down, right? However, if this cracks this and we continue down to this low, which is what I'm ultimately looking for, we can anticipate a pullback on the indexes. So, again, just neutral at the minute. But if you're in on this long, you'd be looking for this premium. So there you go, that's where you'd want to pay yourself right in there. So if you're in on this low, you know, it'd just be a case of where you're holding runners. If you were anticipating the highs to go, so if you're anticipating this high to go, you'd be holding runners to take out that high. So look at, yeah, so See how it gives you absolute precision. And that's what we're after. What's up, Jamal? How's it going, broski? Oh, camera. Shit, yeah, sorry. Sorry, guys. What's up? So Jamal, I know you had a monster day yesterday. So what's going to be your objective for today, broski? There you go. Starting to think like me. Good stuff. I like it. Your job today is to manage your ego. That's your sole job. That's all you have to do today. If you do that, you have passed today's test. Have a monster day. The next day, you reduce risk and manage your ego. Simple. Still recovering. The fish finger sandwich didn't do the trick, no? What one of those if Francesco put his sea bass inside some bread? That's what I want to know. Francesco, you're living the dream, bro. So complete patience going into this open at the moment. Complete and utter patience. That's everything that's wrong with the world. Sea bass is cheaper here than pack of fish fingers. Wow. Let's go catch it yourself, mate. Yeah, exactly that. Genuinely, I've got context for both. Reasons for why prices want to drive the highs and the lows. What isn't cheap? Fishing. Yeah, but Tim, Francesco's from Cyprus, so he can literally just go and do some, you know, Otis Redding type shiz. Go sit on the dock of a bay. You know, have a little coffee, have his laptop, trade, and just sit there with a rod. Catch his lunch. Tim's thinking commercial fishing. I've seen how you guys do it in America. It's like some competitive shiz, right? You have like 35 rods sticking out of these boats. Debbie Miller, 35 pounds. Is that the weight or is that the wrong spelling of British sterling? Because that is one fucking heavy sea bass. What are you feeding them? Babies? I'm about to receive 30 pounds of salmon fresh caught in Alaska for a friend out there. Oosh, lovely stuff. $35 a pound. Ooh, wow. Is it being cured, Debbie? Is it like salt baked or something? I do an absolute mean salmon dish, which is like slow cooked in the barbecue with which is like a soy sauce and honey glaze. Whole flank of salmon, slow smoke it inside the barbie. It's good stuff. Very nice. Sounds good, Debbie. So some of my first ever memories that having whole flanks of salmon that my old man used to cook. Used to go fly fishing up in Scotland, catch salmon, and then eat those little puppies. The way he did it was very different though. He would just do like, he would sort of wrap it in tin foil and just like bake it with like olive oil. What else did it have on it? I think it had like parsley or something. Chive maybe, can't remember. It's still good though, still damn good. Used to eat it cold the next day on a salad. It's good stuff. So if anyone wants to sit down at these charts and go, there is an absolute like nailed on bias, they'd be lying, right? There isn't. It's completely open, 50-50, both sides of the market at the moment. If you were to go long, 5-minute discount using X levels would be your long. Fill on this busy fill. I personally didn't take it, but that would be where you're always looking to go long inside of higher time frame discount. The reason why I didn't take it is that I'm mindful of ES on these lows and the gap fill that it still has yet to do, which NQ has. It's getting down back into this volume imbalance, down at 62 on the Prem on the daily. But I'm also mindful that we have this divergence up on this high and all these relative equal highs as well, which is all the way up at 1905 on NQ. So after a hella monster day yesterday, I'm not in the frame of mind to start trading when the bias isn't clear. Start giving back gains. It's not necessary. Gun to my head. We drive out the highs. Remember what I was saying about wicks doing the damage, bodies tell the story? Like this data wick that we had on ADP, this is literally just a shakeout. It's a shake and bake because it didn't close below this low, right? So this is still our dealing range. So this is our accumulation, and this is just a horrible data wick. So gun to my head, we continue higher to drive out this divergence up on the high up at 1900. However, if I did want to be in that, I'd want to be in here, paid myself inside of an X level on the 1 minute, and then just holding runners to take price out and start working towards the highs. First target would be your 15-minute high, which is all the way up here, which would be 1967. It was just this high here, and then beyond that you'd be looking for price to get up into this. But I'm not in that trade, so I'm not going to chase it either. But guns to my head, it works up towards those highs. Yeah, exactly that, Jamal. It is still wide open. But just got to be mindful that we've got reasons for NQ to drive higher first. Patience. Let the market tip its hand. Like the alternative is you just wait for price to set up an opportunity. Whether it gets up there, then you can start looking at alternative options. There will be an opportunity. Like it just doesn't mean you need to force something pre-open. You don't need to. If it's clear and obvious going into the open, we'll trade it, and we always do. But when it's not and the bias is fiddy, fucking patience. Sit still. Like this morning was super clean, super easy. So this is my accumulation inside fair value model, sweep, 50% of accumulation, boom, there's your entry. Beyond that, you had my H1 to M5 model, boom, lovely stuff. in here, unicorn, boom, take out this divergence. Like, you just got to wait for when it's high probability. Right here, it's not. Throwing into the fact we got more news at 10 o'clock PMI, we could get a choppy morning. This is also the Asia high, and the Asia high has not been tagged. So this didn't take out this Asia high. Whereas we have now swept the Asia low. So this is the potential for a purge for either a buy day to go and run out these highs, or you'd be looking for a Judas. I don't think it's Thursday. I think it's Wednesday 14th. You can say Thursday 15th, but yeah, this gap. So if you look at ES, so ES hasn't filled this gap. We flip over to NQ. That's up here. That's this gap. So NQ is looking to get into the 12th gap. The ES hasn't even got into the 14th. So what I'm mindful of is ES wanting to dive down into filling this gap. What do we have news-wise tomorrow? Non-farm, unemployment claims, unemployment rate. Yeah, biggie tomorrow. But that being said, I've also got context for NQ to come and drive out this high, which I've been talking about all day. So that's why I'm sort of 50-50 at the minute. But guns ahead, the fact that we haven't closed below this, and this is a data wick, guns ahead, it works out the highs. So remember that fair value is on a higher time frame, and this is the daily. It's an opportunity for the institutions to step in. It's also an area where price can accumulate before manipulating and distributing lower. So what you often get is choppy. Choppity chop chop. So it's in here, if you're bearish, you'd be looking to go short. Go on. Go on, live your life. What's up? The fact that you got divergences on this high, sat still. Yeah, okay. So I'm always looking for SIBIs or BISTIs above higher time frame accumulation to frame a inverted fair value gap. Should answer your question. So on this day, utilizing this, basically they work like steps, step ladders. So if price is bearish, you're looking for them to then reject those. Right in here, shorting, or bullish when you're inside of it. But the best way to dial them in is to find them when they're in alignment with their X levels, broski. But the easiest way to find just an inverted fair value gap generally is when you have a fair value gap that you would anticipate to be utilized as resistance, right, for price to continue, i.e. inside of a premium. Once price breaks through, that fair value gap flips to being an inverted fair value gap. So a fair value gap that you'd usually utilize to support continuation, once it breaks through, that then becomes, in the Old Testament, support. This is dead now. Yeah, exactly. Exactly, live your life, yeah. But you want to have it in alignment. You want to have it in alignment with X levels. And if you're ever going to trade a inverted fair value gap, right? If you're ever going to trade one, right? So this, which was used as resistance, once price breaks through, it's now support. So if you ever utilize them, or you want to use an inverted fair value gap, the best thing you can always do is look to see whether your inefficiency above liquidity has been tagged before prices run into that inverted fair value gap. This makes it higher probability. If price rips up into and fills the inefficiency before coming back down to that inverted fair value gap, it weakens this inverted fair value gap. So with an inverted fair value gap, the highest probability is when you haven't fulfilled an objective on the high and you've got reason for price to drive up to it. That's when they become high probability. That was a savage ad, wasn't it? 2 secs. So if you took your short in here, make sure you're paying yourself right here. I'm going to keep an eye on to see if these become decoupled. They look like they're beginning to become decoupled, these indexes. So it's literally just NQ that's not taking out this high, right? You can see how YM's taking it out, ES is taking it out, which again supports me for higher prices, but these are completely decoupled at the minute. What do you do when price is decoupled across the indexes? What do you do? What do you do, ladies and gents? Anybody know? Anybody know? Exactly. Focus on one. Don't worry about the divergences and all that jazz. Or do exactly that. Sit still and do nothing. This is all leading up to just like rank price action at the open. How these are decoupled. But gun to head, we go up for this high. It's just not worth the risk for me. So you've got ES that's already flying through the gap, and you've got NQ that hasn't even gap filled yet, and you've got NQ that's lagging. Alright, so the chances that NQ goes and gap fills is high. But again, they're completely decoupled. Which is when you often get this gnarly, wicky, indecisive price action. Look at YM. YM's not having it. Didn't like the look at that party. He was out of there. So there's your gap fill. If you're holding runners, come and take out this high all the way up here. 1905. If you are in this trade, you've taken it long, make sure you're paying yourself en route. This would be a sensible place to pay yourself right here. You're just holding runners to come and take out this high up at 1905. So it's essentially mitigation of this range. Hold runners to take out this high. So if you go across to the indexes, they've all taken this high out, bar NQ. So Wick's doing the damage on data. Body's telling the story, right? The body's held inside that accumulation, which gave me the gun to head for price to go drive out the highs. Yeah, forget about YM. Don't worry about YM. It's the weird child. That's what I mean by you just want to focus on one. When they're decoupled, you just focus on one, right? And this is the one which is delayed, right? So this is Six Sister. Almost. Did anybody get on the long? Why does my camera keep dying? Anybody get on the long? Anybody? Anybody? There you go. Objective filled. I couldn't shout it out, guys. It was 250.50. I can't risk your money telling you where I'm getting in. But essentially balanced price range. Right. Bosh. Bish bash bosh. I'm not always going to tell you where I'm getting in. It's up to you to decide whether you get in or not. Learn to trade. Red pillars will know. If you're anticipating what? Yeah, 18.9. That was my trade there. So 18.913. and just scaled out. Balance price range on there. Balance price range on the 1 minute. This is BPR. All right. So if price is super bullish, it's going to go out of the premium higher time frame. That's why I said if you were short here, make sure you paid yourself in here if you were holding runs, take out the low. So when we broke out here, now balance price range, enter inside balance price range. Price should not go through balance price range. But I'm not always gonna say it. Sometimes you guys got to, you know, stand on your own 2 feet sometimes. Gave you the draw. It's your decision to get up there or not. So NQ's fulfilled its objectives on the highs, right? It's fulfilled its objectives. Okay? Bosh. So when price fulfills an objective, what do we do? When price fulfills an objective, coffee, sit still, right? If you have reason as to why price would now reject this to go and dive out the lows, sure. But for me, when price fulfills an objective, I sit still, right? I don't immediately go jumping in looking for another trade, because what normally happens is price goes into price distortion. It just accumulates and fucks over retail. And if you look in terms of X levels, where we've come to, oh, funny that. I got you by a tick on entry, but unlucky, son. But I closed mine 40 points, didn't want to hold. I felt I got in too high for that. Yeah, I mean, it's you know, it's high risk. I'm not going to shout out something on YouTube when I'm risking your guys' money when it's high risk, right? I already had cushion to play with. I'd made money during London, right? You know, if it's A plus and easy, I'll happily get you guys involved. I'm always going to do that. I'll give you my bias, I'll give you my draw, I'll tell you what I'm looking for, but it's up to you to then decide to trade it sometimes. Sometimes it's going to be like that. You got to stand on your own 2 feet. But we talk about this often. If price is hella bullish, it's going to go out the premium side. Yeet skis. Okay, so now you're seeing it respect it, right? This is where this becomes your buck stop. You don't want to see price below that low. So then you're looking for a PD rate to frame an entry off. There's your balanced price range. 50% of BPR, you're okay with that. Price can even, I was allowing it to come all the way back down to here. I was going to parlay in at the low of BPR. So that's why I've only got 2 contracts. But if price tests BPR, the next candle, it should not go below 50%. Okay, so that was essentially my bias in this little piece of price action here, right? Inside BPR. With my context for this high. Having noticed that YM had gone on an absolute ripski and cleared out this high, so the only one which hadn't taken this high was NQ. Right? And NQ does the turtle suiting. Never forget that. You know, so I said gun to head. I'm going to drive out the highs. So that's where I'm leaning towards, right? So yeah, if price had gone through this low, it would have stopped me out and taken me out, moved to the sidelines. Okay, cool, I was wrong. All right, but you just got to trade along with your bias, whatever your bias is. Right? If we had you know, broken down this low and we'd broken structure on the 5 or something, you know, then we could start looking for a breaker structure, returning to a premium. If you were trading that, look for a turtle suit entry to then go and go and drive out its low to get down to its gap fill. Right? We didn't get that. We had the opposite. We had price respecting a premium, balanced price range to go and drive out our target on the high. Confluence, all of them indexes have driven out that high bar NQ. And just as a general rule of thumb, like I only go long in a premium unless price is hella bearish. And like hella bearish. So 9 times out of 10, I'm going long inside of a discount, a higher time frame discount, right? So this is X levels discount on the hourly. If you remember, I said price didn't close below this low, so we didn't have a break of structure. This is our accumulation, mass accumulation of long positions. This is a horrible data wick sweeping out liquidity, but it closes back at fair value on this accumulation inside fair value. So again, we're now back inside the discount side for price to continue higher, right? So now it's just trying to find your entry. Does that make sense? Everyone understand that? Tricky trade, granted, but you get it. Yay, nay, maybe. A's. But well done, D-Mel. Great stuff, mate, because I didn't even call that out. So really well done, buddy. Red pills be printing. Guys, if you found value on this stream today, or God forbid, as I say, you've bagged with me, would you consider smashing a like or a subscribe if you don't already? It would mean a great deal. Thank you. From the bottom of my heart. It means a lot. And if you're not earning, at least I hope you are earning. Or the other way around. If you're not earning, hope you're learning. You're welcome, Deb. So exactly the same principle, right? Up inside your X levels on the premium. There's your TS. If you're looking to drive out the low. I'm personally flat. I don't need to trade this, right? After price fulfills my objective. So let me just clarify this. So when I go into the day, I have an objective that I want price to achieve, and I use a variety of ways of developing context and schematics to do that, right? And also market structure. If you can't and don't know what any of those are, like I teach all of that stuff. But when I go into the market and I'm looking to, frame a trade, it all has to have that before it, that pretext before it, and then I'm just trading to that bias. Once that objective is filled, I'm done. It's done. That is my objective for the day, and that is price's objective for the day if it fulfills it, right? So when price fulfills that objective, more times than not, I'm in alignment with the institutions, and so the institutions have also fulfilled their objective. So what I don't want to then do is start jumping in trades once price has fulfilled an objective. So when I say price has fulfilled an objective, I mean that the institutions are now distributing their positions. Okay, and this is where the retail get chopped up because they're now chasing price. Oh, we must dump here. We've taken the high out. Oh, we must continue here. It looks like a bullish day. Right, and all that happens is price chops, because the reality is the objective for today was to come and take out this divergence on the high, right? There is no trade here. This is where price just goes into distortion. So yes, of course, you've gone back up into an X level premium, but this is when you have to understand how to frame context beforehand, right? If price continues and dumps and allows ES to go and drive out this low, fucking great, awesome. But it doesn't necessarily mean that I have to be in it. Like, my objective today was to fill that high. Boom, done. So if you're trading ad hoc, you know, you're just coming to the charts and you're like, oh, well, this feels right. You know, let's just trade this, you know, this looks like a fair value gap. Or boom, look, this is an immediate rebalance. We must be going back up into here, take out. Like, you're just trading ad hoc. There is no approach. There is no strategy. You're gonna get yourself beaten up, right? You have to have a bias and a structure to your trade, and then you trade along with that. You trade in alignment with it. And so I'll often say I'm bullish until proven otherwise, or bearish until proven otherwise. Today I was bullish until proven otherwise. All right, my objective to take out this high. So once it's done that, okay, cool, great. Mission accomplished. Yeah, it's conviction. But you know, equally, Debbie, it's also a line in the sand, right? Because if you're trading ad hoc, you don't really have any conviction, or you don't really have a strategy or a plan or an approach that you're actually trying to achieve. So if price starts doing opposite to what you want it to do, and you don't really have a structure, you're very quickly either going to chop it, i.e. choke the trade, or you're going to, you know, start fucking around with your stops because you don't actually know where your entry is or what actually price is doing, right? But if you have a strategy and a bias, so my bias was longs to come and take out this high, then I'm trading up to that high and I'm looking for an entry to get up there, and I'm looking for buck stop levels to get there. It's like lines in the sand. If price starts carving through this, and as I said, broke low, break of the structure, I'm wrong. Right, I'm wrong, okay? There's no if, buts, or maybes. So it's not like I'm going to go, oh, okay, well, let this start trying to pile in longs here. Fuck no, I'm offside. At this point, I'd wait for price to resettle up a new opportunity, and then I'd look to go and drive out the context in this instance, which would be to allow ES to go and fill its gap. Right? So it's conviction in the trade, right? Knowing that what I'm wanting to do and what I'm looking to achieve, which puts conviction into my entry, puts conviction into my stop placement, puts conviction into my TP. But it's also conviction on when I am wrong, which is almost far more important. Because often you'll have, you know, especially if these people who trade scalps the whole time, you know, there is absolutely no consideration of context or whatever, you know, wider direction, higher time frame draws and liquidity, market structure. They don't know what they're, you know, they're just trading, you know, ridiculous liquidity pools. And so as soon as it starts going against them, they're lost in the charts, right? They're just doing everything. And before you know it, you're spiraling in the wrong direction, especially if you're trying to bounce a sell day, God forbid. Right? But if you don't know how to frame context or schematics, that is literally what I teach. It's probably what I'm best for, is my ability to determine directional draws and liquidity. Getting in sync with price is the easy bit. Right? Once you understand how to use X levels properly, you understand my strategies and approaches for engaging with the market, things that you're looking for, X, Y, and Z. Red pillars will know what I'm talking about. That's the easy stuff. Knowing where price is going to draw to is the stuff that separates the average, the wheat from the chaff. Oh, baby. Yes, sir, there is news in 4 minutes. Okay, I'm with you. So remember what I mentioned about potential for a buy day. You want to be very, very careful trying to short this. Well, she goes. Should break a block entry. So unicorn. Yeah, exactly. Like if you're not in it, this is just one of those again where you just got to go boo boo. Like, do I wish I still had? Do I wish I had another runner? Of course. You know, everyone would like more runners. Everyone would still like to be in a trade, but I'm not. It is what it is. You know, this isn't where you sit here and try and chase it. Boo boo boo. The fact that this is accumulation inside fair value, this is a dirty manipulation. There's absolutely no chance I would short this today. Absolutely no chance. Not in an AM session anyway. Right, guys. On that note, I'm gonna call my day here. Fulfilled my objectives for today. Just anticipating a buy day. We'll look to see where we are, either at London close reversal or going into the PM session. So for YouTube, I'm gonna call it here. I'll jump back into Red Pill soon, guys, and trade with you in a bit. But I'm just gonna go and take a little break. All right. So if you learned something today, good stuff. If you managed to bag and get inside with bias, good stuff. And we'll do it all again next Tuesday if you're about. If not, I'm inside Red Pill. Alright guys, so take it easy, have good ones, and I'll see you on the next episode. Alright. Ambush!